Good morning from Los Angeles and happy Wednesday. It's Alissa, Coram, and Shreve here with your market update. We got a full show today talking about Garmin moving big on earnings, plus analog devices, trade desk, and wicks. But first, let's take a look at the major indexes. We are up across the board. The NASDAQ leading up about 0.3%, and the S&P 500 and Dow up about 0.1% each. So we're continuing to climb and climb.
Yeah, it's sort of a quiet open for the stock market. We do have the Fed minutes at 2 p.m. Eastern today, which could be a market mover. We'll see, but we'll take a look at a chart of the NASDAQ here and see it's been in a nice, really powerful move off lows since late December. Of course, we had a great follow-through day for the S&P 500 on January 4th. Technically right now, though, you can see the NASDAQ kind of grappling at the 200-day moving average, and that 7,500 round number is, could be a stumbling block. We'll see, but if the Fed minutes come across as dovish today, it could bring buyers in, and maybe the NASDAQ can take out that 7,500 level with conviction. We'll see.
That's right, yeah, some potential catalysts later in the session. And we want to check in on Garmin stock, up some 15% in massive volume today. A big beat for earnings and sales here for the quarter, and this is just an extension of the gains that we've seen after a recent breakout headed into the earnings report for Garmin. Yeah,
I mean, headed into earnings, it was trading very close to a conventional entry, right around 70.87, but a very powerful gap up for the stock today. The management talking about strength in aviation markets, outdoor, fitness, marine. So they're in a lot of different markets, and just a very well-run company that makes a very good product, actually. So bullish gap up today, gaps up over that 70.87 entry. So this is a case where buying near the open price, maybe not bad strategy. We've seen a lot of gaps up in price that have held gains and even moved higher after that.
That's right. It's been a good strategy for a lot of these earnings moves that we've seen. And analog devices shares hitting a new high, up about 3% in heavy volume after its quarterly report. Now, it did beat expectations, although the year-over-year numbers did decline. So in the semiconductor group, still investors liking the report, even though not the numbers that you would like to see out of a growth company.
Yeah, I mean, earnings and sales declined from the year-ago quarter, so that raises a little bit of a yellow flag. Very cyclical business for analog devices. It's obviously a mega cap chip maker, but technically pretty strong. It's been a really impressive rally for semiconductor stocks really all year, and so a nice move by analog devices today. Conventional entry here of 103.69. Probably arguably still in buy range here, but you can see it's made such a powerful move off of lows. Sometimes when a stock moves like this, you like to see a little bit of a shakeout, maybe a little bit of a handle form. So probably still within that 5% buy zone from the 103.69 entry, and pretty good reaction by the stock.
Yeah, that's action that we've seen with a lot of stocks that had really deep bases coming out of that correction. Now they're just really flying higher up the right side. Haven't really yet seen too many of them slow down to take a breather yet. Maybe we could see that soon.
Well, I mean, their charts look exactly like the S&P 500 and the NASDAQ, just kind of a straight move up off the bottom. There will be a point at some point where the market does consolidate a little bit. If it does, we'd like to see that happen in light volume. But as far as analog devices, it's, again, chart looks a lot like the NASDAQ and hitting a new high today.
All right, and trade desk shares down ahead of its quarterly report, some 7% in heavy volume on a downgrade by Stifel. Earnings are due Thursday after the close for the company in the commercial services advertising industry group, and the move today comes just after a recent breakout.
Yeah, 149.10 was the latest buy point here, so headed into today trade desk a little bit extended, but this is a company that reports earnings tomorrow, Thursday, after the close. Very, very strong earnings and sales growth in recent quarters. Another strong quarter of growth expected, and a very innovative product here. They operate a software platform where clients can come in and basically buy and manage digital advertising campaigns. So they're in a nice sweet spot of growth. We'll see what the numbers look like. Stock looks a little bit vulnerable here. It wasn't really a powerful breakout over 149.10, not much volume, but shares weak today on this downgrade.
Yeah, but we will have to keep an eye on how the stock performs after earnings. If it does happen to gap up and hold its gains, and maybe we could employ that gap up strategy.
Yeah, I think you know, good news, better than expected earnings, and a gap up in price tomorrow. Stock could very easily be actionable.
All right, one to watch. And last but not least, we have Wicks shares down over 10% in heavy volume after its quarterly report. We did have earnings and sales better than expected, but it was the guidance for sales that are hitting shares today.
Fast grower, always held to a very high standard around earnings. You know, and earnings and sales beat not quite good enough. The market was interested in what the outlook looked like, and the outlook for the current quarter, you know, sluggish at best, and full year sales outlook also a bit sluggish. So stock down sharply today. Nice breakout for Wicks yesterday over that 121.55 buy point, but it was a very good report, but not a great report, and shares are under pressure as a result.
And you know, it just goes to show you that just because it's in a strong group doesn't necessarily mean that it's going to do well on its earnings report. The enterprise software group, as we know, has a lot of leaders in it. Just Wicks isn't among them today.
Well, it's really one of the last stocks to break out in the group. There have been many breakouts in the enterprise software group, but Wicks.com was acting well ahead of earnings, but you know, the numbers weren't quite up to snuff, and it was really the guidance that's hurting the stock today.
Yeah, well, if you're still interested in that space, there's plenty of good-looking names to look at in that group. Many,
and on a lot of our growth screens, like the IBD 50, sector leaders, enterprise software makers continue to be a really nice pocket of leadership in the market.
Yeah, that they do. All right, everyone, thank you for joining us today, and a special shout out. We do have an options webinar coming up tomorrow with Chuck Fulkerson and Justin Nielsen. Make sure you go to investors.com/webinar for all the details, and we will be back here, Ed Carson and myself, at the close for our Stock Market Today update. So in the meantime, make sure you're heading to investors.com for the latest stock news and analysis, and we'll see you then.